Hello, everybody, and welcome back. How can investors have a positive impact on the environment, society, and companies? This question is as old as ESG itself. But how exactly does impact investing work? What are the challenges? Where are the investment opportunities? I'm delighted to talk to a great expert about this topic and her positive impact strategy today. A warm welcome to Evgenia Molotova, a senior investment manager at Pictet Asset Management.
Thank you so much. I'm very happy to be here.
Evgenia, what are the special characteristics of impact investing compared to other sustainable investment strategies?
For Pictet in general, impact investing means investing in companies which create positive societal and environmental outcomes. This investment needs to be intentional. So when we consider the investment, we think about what outcomes we will create, and it also needs to be measurable. If you look at the existing strategies, a lot of them targeting products which are already contributing positively. What we are doing differently is that we're looking at the whole spectrum of the companies and are trying to improve their impact via active engagement. So we as investors trying to serve as a catalyst for their impact improvement. And this is what it means for this product. We separate ESG and impact. So for us, impact primary is what effect products and services that the company provides have on society and environment rather than its own operations. So operations are equally important. But we start with looking at whether what company produces has positive effect on us or not. And if it is needed by society, but the effect is somewhat negative, we will try to work with the company and improve this effect.
Hi there, just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much and enjoy the video now.
What role does the United Nations Sustainable Development Goals, the SDG framework, play in creating and managing your portfolio strategy?
UN SDGs were created in 2015, and this is a framework which is widely accepted by states and companies to measure the impact that they have. Why we use SDGs? SDGs is a framework which is wide enough that it concentrates both on society and environment. It allows us to undertake measures which will bring us to more sustainable future. This framework was created for the states, so it's not always easy to adapt it to the companies. However, when the framework was created, it was stated many times how important it is for a private sector to also take measures that the states are taking in order to get us where we need to go. So we believe that this is a framework which allows us to not concentrate on one particular aspect, but have a holistic approach to the investment and think about both society and environment. What can we improve, where the companies are at this moment of time and where they should be in 10 years' time, and how we can help them to get there as fast as possible.
How can professional investors like Pictet generally influence companies to improve their ESG practices? And what measures do you have to have an impact on companies?
As Pictet, we work a lot with the companies to help them improve their sustainability profile. So we have the whole array of methods that we are using. Obviously, exclusions, which are widely used by the investment society, is one of the methods. And we do have exclusion framework at the Pictet group level. However, exclusions are not always efficient. Very often, for example, we will still need steel, even with all the negative environmental externalities. We need steel to build bridges, we need cement to build houses. So how can we help these companies to improve their alignment and to eliminate negative environmental externalities? So we can do it via active engagement. And this is one of the instruments that Pictet uses a lot. In our particular strategy, last year we had 152 interactions with the companies, but only 24 of them consider to be active engagements. So engagements are targeted. We always set up measurable objectives that and the time frame within which we want to achieve those, and we follow with the company. So we believe that active engagement is the main instrument of improving impact. We also use proxy voting, so we always use active voting at the Pictet level and at the strategy level as well. And we believe that all this combined helps us to have distinct strategies on how to improve the impact that the companies have on the world.
How do you assess the impact of a company's ESG practices and its potential for change for the better?
As I said, within our framework for our strategy, for us, products and services of the company are very important. And we look whether the products and services of the company are aligned with sustainable development goals, whether they can be aligned, and whether the company has sufficient resources to get there. So the first criteria is whether this product will be needed in the future. As I said, we will need steel. Second, whether there is potential for the company to align with the SDGs. For example, Diageo, the alcohol producing company, will unlikely start producing milk. So it's unlikely that they will change their product range. So there is no need for us to engage with them. There will always be demand for their products, and they will not change their business model. So for us, it's very important that there is a need for a product and the company is willing to realign itself. And another very important criteria is that the companies need to be financially stable, especially when you need to realign. It very often requires investments. So we are looking at certain financial criteria like return on capital, cash flow generation, which we will believe allow company to realign itself faster and better. We're not looking for a financial transformation case. We're looking for impact transformation. Hence, financial stability is very important. So these are the criteria for the companies to get into our portfolio. And obviously, we want the company to be open to the engagement. So before getting company into the portfolio, we always have meetings with the management and see whether the company is open to the proposals that we are putting forward.
How do you identify companies for your investment strategy? And how does your team reconcile the goal of financial returns and positive ESG impacts?
We worked a lot with our data scientists, in-house data scientists, to develop a tool which allows us to look at any company and see how its products and services are aligned or misaligned with SDGs. So this tool allows us to look at the companies at scale. So we can look at the whole of MSCI. We can look at private companies or public companies. It allows us to eliminate subjectivity. So it's not my opinion what is good and what is bad. It's actually based on the analysis of the scientific literature. And it also allows us to make the message reproducible. So we always know why this company is considered to be aligned or misaligned. So we are using this tool to look at the companies and whether the products and services of this company are aligned, whether this company has potential to be aligned in the future. And after that, we are using financial analysis, fundamental analysis of the company to see whether it has acceptable returns at the present time and whether this realignment will result in even better return. As I said, realignment often requires investment. What we make sure of is that there is always positive return on this investment. So we are looking for cases where realignment of the company will create new markets. The companies are likely to gain market share, improve their returns and things like that. And if you're looking for these cases, it means that these companies will likely to outperform the market. So for us, it is very important to combine positive societal environmental outcomes with outperformance, with the financial outperformance and financial stability. We do not want to look for one at the expense of another. So both are prerequisite for the company to get into our portfolio.
For which SDGs does Pictet expect the strongest changes? And what are the decisive factors for this?
As I said, we follow this holistic approach. We believe that both social and environmental changes are necessary to get us to a sustainable future. So we do not want to focus on one particular SDG. And our tool allows us to evaluate the company holistically and to see where it is already positively aligned, where it needs to improve its alignment. So we do not concentrate on one particular SDG. Instead, we are trying to achieve measurable improvement in overall alignment of the company to SDGs. As I said, SDGs were created for the states and not for the companies. So some of SDGs, like SDG 16, for example, peace and justice, or 17, partnership for the goals, are not very applicable for the companies. They're more relevant for the states, so we're not using that. But otherwise, we are looking at overall improvement of the company alignment profile rather than concentrating on one SDG.
Which corporate sectors or industries offer the most promising opportunities for impact investing, and on which SDGs do you focus currently with your portfolio?
We are trying, again, we need different products. We will need different products in the future. So we don't want to eliminate any sectors. So we analyze companies in different sectors. Obviously, intuitively, it might be easier to find companies in some sectors than in others. For example, in industrials, because industrials very often are enablers of this change, it is easier to find the companies. If we look at consumer goods, for example, luxury goods is a great business model, but what do they add to society environment? Birkin bag is at best inspirational for some people, but whether we can improve alignment of these products, it's highly questionable. So it's often more difficult to find companies in consumer, especially in consumer discretionary, and it's easier to find in industrials, but it doesn't mean that we're not looking.
Yeah, this leads directly to my next question. So you, having a look at your portfolio, you have a strong focus on industry there. For example, Baker Hughes, you mentioned, a company from the oil exploration sector. So eventually you wanna explain, so where is the impact approach with this company?
Yes, Baker Hughes is a very interesting example, and oil and gas sector is a very interesting example in general. So a lot of oil and gas companies, especially companies in exploration and production, are talking about improving their profile and becoming renewable power generation companies and not exploration and production. We put these statements under some sort of doubts, because if you look at oil and gas companies, they're geologists by nature. What are the transferable skills for oil companies to become power companies? If I want to have a green power company, I would rather invest in utility, which makes it very difficult for oil and gas to pivot to power. It can be, in many cases, value destructive. So, because for us, fiduciary duty is equally important as creating positive societal outcomes, it's unlikely that oil and gas exploration company will get into our portfolio. We believe that these companies will just need to return money to the shareholders and sort of gradually wind down their operations. Whereas Baker Hughes is an oil services company, and historically they were involved in drilling services. But they have one business segment, which is compression technology, which already generates more than 60% of their profit, where they have leading market share. And this, at the moment, technology is used for LNG, which is transitional future. However, it's also a very profitable segment for them. They're interested in growing it further, as opposed to oil drilling, which is loss-making. However, this technology will also be needed for hydrogen in the future, because hydrogen is the least energy-dense fuel you can possibly have. So you need to compress it a lot to transport somewhere. So we are working with Baker Hughes on one hand, longer term, making sure that they will be able to transition into this hydrogen economy from services or service in oil and gas companies. So they need to allocate a certain amount of capital on R&D in this area. And on the other hand, in their legacy business, we're looking at methane leaks and leaks in general and how they can eliminate externalities of the current oil drilling business in the present. And this is why we're interested in this company, because we believe that the product that they produce now will have place in the future, and it's a profitable product for them. So they're interested in developing it as well.
So this was Evgenia Molotova, Senior Investment Manager from Pictet Asset Management. Thank you very much, Evgenia, for being with us today and sharing some insights into your positive impact strategy.
Thank you so much for inviting me.